An efficient and secure financial market infrastructure, or FMI, is an important building block to develop the local currency bond market, or LCBM. The FMI framework includes systems necessary for the issuance, trading, settlement, registration, and custody of securities, supported by payment systems for cash settlement. An efficient and secure FMI facilitates the smooth flow and settlement of transactions in the money, primary and secondary markets, thereby strengthening investor confidence and stimulating the pace of market expansion. The FMI building block is evaluated around 6 dimensions of system functionalities and its use. These are electronic systems, an FMI framework, sound governance and access policies, minimized market segmentation, collateralization functionality, and legal power. Let's start by exploring the first dimension, that is electronic systems. Electronic systems improve efficiency and reduce risks. Core FMI systems for LCBM include government securities auction systems, security registers, real-time gross settlement or RTGS payment systems, central securities depositories, and security settlement systems. Modern systems support electronic payments, fast and efficient low-risk settlement for high volume of transactions, and straight-through processing between the core systems. The next dimension is an FMI framework. A framework should minimize counterparty and market risk during clearing and settlement. Counterparty credit risk can be limited when the finality of payments and transfers of dematerialized securities is protected by law even under bankruptcy. The risk is also minimized when Central Securities Depository System supports simultaneous security delivery versus payment, or DVP. Market risk can be contained by reducing the time between trade execution and settlement finality. The more frequent the DVP model netting intraday, the lower is the market risk exposure to the netting arrangement. Another dimension is sound governance and access policies that strengthen the credibility and functionality of FMI. The owner and operator of the Central Securities Depositories, or CSD, and Counterparty Clearing House, or CCP, should have a sound reputation. They should have clearly defined roles and functions, including the legal mandate to develop and operate the system. They should also have the financial capacity to invest in system development and absorb adverse financial and business shocks. The owner and operator of the CSD and CCP should be subject to the oversight of regulators, thereby ensuring accountability. If multiple CSDs or CCPs exist, market segmentation between the systems should be minimized. This dimension of system functionalities helps deal with the high costs and inefficient transfer of securities, different access rules, and different settlement or netting models. These issues of market segmentation can limit the potential for secondary market development and make the repo market unviable. The FMI should also provide collateralization functionality to support the repo market. Through this dimension, the FMI should enable participants to liquidate government securities by offering low-risk intraday settlement for an outright sale, intraday and overnight repo functionality consistent with a written master repurchase agreement, and an intraday collateralized lending arrangement. Finally, the FMI should have the legal power and the capacity to collect and publicly release data regarding government securities. An electronic registry and CSD should have the capability to extract information on transaction activity by security, security type, and security holdings by sector. In conclusion, systems used to settle and clear transactions in the LCBM should be safe, cost-efficient, and convenient to use. The FMI should have a clear legal basis, provide delivery versus payment, be subject to regulatory oversight, and have the necessary capacity to process trading volumes within the chosen settlement cycle with high certainty and low costs.